JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 3rd of August 2020. So yep, welcome everyone. Welcome to this first trading day of August. As always guys, we'll have a look at the charts, some of the charts that I've looked at last week, just to see how everything's kind of getting along. But before we go in, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now let's have a look at what's happening here globally in terms of the coronavirus. Now the figure unfortunately we have climbed above the total kind of 18 million here across the globe. Some sources show a bigger number than that, but yeah, for now it is what it is. The only kind of little positivity in all this is the fact that the daily cases did not surge again. I hope it stays like this. I mean, I hope this has been the peak right now, but again, we cannot really talk about that. But every single time here, as you can see previously, when it peaked, yes, it did drop lower, but then kind of sharply reversed back to the upside and created a new high. So that's why we'll remain very careful on that. So now then, jumping into the indices. So Nikkei today closed nicely in the positive territory. We did get a bit of data from Japan this morning, and let me just kind of refresh my memory on that. So that we had the GDP figures and the preliminary GDP figures. So Q on Q and year on year basis. So yep, those came out maybe not ideal, but still much better than the initial forecast. So both numbers came out as the previous ones. Have a look at the economic calendar, guys, on that. So also the Japanese manufacturing PMI was better than the forecast by a significant amount, I would say. However, it still kind of remains in contraction. But and as we saw, investors here today kind of took this as a positive and kept the index in the green for today. So the market is already closed, but yeah, I mean, maybe for tomorrow we could see this one pushing a little bit up again here further north. But again, let's not get ahead of ourselves. Last week I was talking about this idea where the index could drift lower, test the 200-day EMA or the 100-day EMA, or even the kind of the last resort could be here near the 21,530 territory. But as you can see, it was enough. The 200-day EMA was enough for this index, and then it rebounded. So everything's kind of for now working according to plan. The only thing is that probably the bulls should not get their hopes up yet too much, because there are a bunch of good resistance levels which previously acted as support. Now, for example, the 22,285 zone marked by the low of the 10th of July could play the role of resistance. Slightly above that, we do have the 21-day EMA, which could also kind of hold the price down. Now, another thing for you to kind of keep in mind is a possibility, which could be a possibility of seeing something like this, basically, where the index could drift a little bit higher, could overcome the 21-day EMA, but if it, for example, struggles to get above this downside line, newly established downside line taken from the high of the 10th of June, or even better, a push above the 22,965 territory here, if it fails to do that, then yep, another round of selling could be possible. But if we do see a nice push above this level, then higher levels could be met. So that's why for now, guys, even with the upside, be very careful here for now. We could see a bit of a few higher levels here, but again, in order to get excited about much higher levels here, a push above the highest point of July here near the 22,965 zone would be needed, at least that, because then we'll keep on monitoring the highest point of June, and yeah, of course, but like I said, we'll get to that point if we see a strong move here to the upside. Now jumping into the German DAX. So the index closed in the red last week, and well, of course, not great for the bulls. We didn't really reach the 200-day EMA as initially was expected. However, maybe this is something for this week. But let me just quickly have a look at the cash index and where it's currently balancing at. So we are seeing that a bit of a move back here to the upside. However, as we can see right now, the price is currently balancing near the 12,373 territory, so still below this level here, the one that I was talking about, the 12,416 territory, marked by the low of the 10th of July. So in a way, this, of course, this fact that it's still trading below it kind of makes us a little bit careful and cautious. And let's put it this way, if it continues to balance below this area, then, well, we actually could see a move towards the 200-day EMA or the 11,957 zone probably soon. So again, keep your eyes on this low of the 10th of July here, near the 12,416. If it continues to balance below it, then yes, like I said, aim for some slightly lower areas. In terms of the upside on this one, now previously I talked about this 13,236 territory. Now we could start looking at maybe slightly higher levels if we at least get a push back above the this level right here, the 12,773 mark, which, as you can see, recently acted as a fantastic area of support, but then it got nicely broken here. This is one of the levels that I was talking about last week, and so that's why a push back above this area could maybe kind of bring a few more bulls to life. So yeah, like I said, for now we'll just have to play the waiting game a little bit here. Now jumping into the FTSE 100, also kind of looking a little bit more bearish than bullish. So the FTSE right now, the price is currently bouncing near the around the 5,888 territory, maybe slightly above that. So we'll basically see a slight opening gap to the downside, most likely, unless something changes here rapidly. But yeah, the fact stays the fact that we are still below this area, and I talked about this 6,030 territory and also the 5,962 zone here, which both of those levels got broken, and we can see that last week the index closed below it as well. So in a way, all this is kind of still increasing the chances for the FTSE 100 to drift lower. However, if by any chance the index starts moving back above the 6,030 zone, then maybe the bulls could get a little bit more excited here and potentially drive this one higher. Of course, don't get me wrong, we do have a few downside lines here that we could draw, so one of which could be this one here. So if you're more on the cautious side, you could just wait for a break of this downside line first and then kind of consider maybe slightly higher levels, especially if the price starts climbing above the 6,342 zone here, marked by the high of the 23rd of June. So keep your eyes on that one. Now jumping into another index, and this one is a dollar index, and I've talked about this one a while ago. Basically, it reached my level here, the 93.81 zone. It even overshot it and continued to slide now. And let me just actually recycle one of these lines. Let me grab this one, and basically the index drifted lower and created kind of on Friday it created this new low for July, and that was near the 92.55 zone, from which it rebounded, and today we're seeing kind of a bit of positivity. However, the price still remains below the 93.81 zone, and this level here was the, let me just show you what I'm talking about here. That was the lowest point of September of 2018. So basically, if we get a push back above the 93.81 zone, then yep, this is where it could become a little bit more interesting for a few buyers here, and potentially could lead to a larger correction, because don't forget that the move higher here could still be seen as part of a correction, because we are still trading below this downside line taken from the high of the 23rd of March. Now then, in case of the downside, now of course if the barrier here, the 93.81 zone, continues to provide resistance, then we could see another round of selling, potentially going back to the 92.55 territory. But if that gets broken, now this is where it could turn out to be a little bit more ugly for the bulls here, for the buyers, and yep, a break below the 92.55 zone would confirm a forthcoming lower low, and lower levels could be met. But for now, guys, given that we had a nice rebound here on Friday, basically in Friday we had a new low for July established, but at the same time then we had a sharp reversal back to the upside. So this kind of gives a bit of hope here for the US dollar bulls, and however, we would prefer to wait for a push above the 93.81 zone first before, let's say, considering slightly higher levels. Now, jumping into gold, gold is still stuck here. However, this morning, as you can see, it did push a little bit higher and formed a new all-time high. So it just basically kind of keeps on grinding higher slowly. So it reached the area near the 1988 territory, roughly around there, but then kind of declined back below the highs of last week. So in other words, on one hand, it seems that yes, gold does want to continue pushing further north, especially given that the psychological 2000 level is very attractive and is very close. So however, we'll go step by step on this one, because we already had a decent rally. So in a way, given the fact that it did push higher, it did push above the high of last week, so yes, it worked out nicely with the idea that I discussed last week, that if we get a push above the high of a push above the one of these highs that we saw last week, then yes, higher levels could be met. It did form this higher level, but as you can see, it kind of made its way back down again. So that's why we'll be very careful, and if we want to aim for some higher levels again, probably we'll wait for a push above the 1988 zone first, and then kind of we will aim for some higher levels, because again, at the moment it is a little bit of a difficult one. So wait for that push above the 1988 zone in order to kind of aim for some higher levels, because that would confirm a forthcoming higher high. Now, in case this suddenly starts dropping back below the 1944 territory, somewhere around here, or even better, let me just adjust this level right here, somewhere below the 1940s, basically 1940 level, then well, we could see maybe a bit of a larger correction to the downside. And the reason why I'm saying correction, as you can see yourselves, we are still trading above this upside support line taken from the low of the 20th of March, so keep your eyes on that one. Jumping into Ethereum, so here Here the situation is a little bit interesting, I would say, if I can put it this way. So basically, yesterday the crypto did kind of go ahead with this idea that I've mentioned on Friday of seeing maybe a small correction first, but well, to be honest, it was kind of 50-50, to be honest. It did do the correction, but first it kind of accelerated higher. So well, I mean, it's an interesting one. The crypto world is always full of excitement. Sometimes when it moves, when it doesn't move, I mean, it's just well, as always, as boring as well, or very boring. But nevertheless, the crypto here, the Ethereum, drifted lower yesterday, heavily to the downside. Ended up testing the area, just testing the psychological 300 zone, and then kind of rebounding exactly from there and creating a new high for this year. And let me just kind of mark that one on the chart. Let me just grab one of these lines here. There, let me just, there we go. So it hit the 416 zone and kind of corrected back down again. So this morning we saw the crypto kind of moving closer to the 363 territory, and I've mentioned this level previously. That was the highest point of 2019. So the highest point of 2019 right now is acting as a very nice area of support. So basically we'll keep an eye on it, and in a way for now it's still, everything's looking quite positive. But yeah, for now, like I said, keep your eyes on the highest point of 2019. If it continues to provide support, that's great. We could see this one pushing back maybe towards the yesterday's high around the 416 level. But if it fails to provide support and breaks, then maybe a bit of a correction here could be possible. So again, be very careful, guys. For now here, we had a decent rally, but let's see if we can actually correct a little bit lower. For now, of course, the correction, the larger correction, is slightly off the table unless it starts dropping back below the 363 territory. Jumping into a few pairs very quickly. So US dollar against the Swiss franc. So this is basically a nice reflection of the DXY that I've mentioned just right now. So last week I was telling you guys to keep a close eye on this barrier, the 0.9073 zone, and as you can see, the index did break below it but remained above it and closed above the lowest point of May of 2015. And basically now there is a possibility we could see this one pushing a little bit higher here. However, we'll be a little bit on the cautious side, because we would prefer to wait for a push above the 0.9184 zone, which is marked by the lowest point of March, in order to kind of aim for some higher levels, or should I say slightly higher levels, up until this downside line taken from the high of the 28th of May. If we do get this push, then yes, like I said, we will aim for this downside line, but we need to see, like I said, a push above this 0.9184 zone first. In case this struggles to get above this barrier, then we could see a bit of selling, maybe a move back down. However, probably for us to get excited now with lower areas, we would prefer to wait for a nice daily candle close here below the 0.9073 territory before, let's say, examining lower areas. So keep your eyes on that one. Now, GBP and ZD. So this one had a fantastic move on Friday and last week in general, and the pair found resistance near the 200-day EMA here. In a way, for now, everything is looking quite positive. The pair could continue moving higher. However, in a way, also what it could do here is maybe correct a little bit lower here, test the high of the 12th of June, and then if it provides decent support, then we could see a nice rebound and maybe a move towards the that psychological 2 zone. But again, for now, let's be very careful. Of course, in case this decides not to retrace lower and pushes above the 200-day EMA straight away, then yes, like I said, we'll aim for that psychological 2 level straight away as well. So like I said, for now, everything's looking quite positive here and for this pair, unless it starts falling somewhere back below the initially below the 1.9475 zone, or even better, the 1.9322 area here, marked by the high of the 21st of July here. So if it drops below this area, then yep, the downside could be back on the table. Now jumping into GBP. Now I want to touch on GBP CHF first, probably. So this one here is also looking quite positive, and GBP CHF is looking quite interesting, and basically it is pushing higher also. We're breaking this downside line here, as you can see, taken from the high of the 13th of December, or in other words, the highest point of December of last year. So all seems to be fine here, but we would prefer to wait for a push above the high of the 16th of June here near the 1.2037 zone. A nice good push above it could open the door towards higher levels. Until then, guys, be very careful, and let's see how all this is gonna play out. But again, for now guys, it is looking quite positive. So let's see if it can push further north. We are going to be, I will remain somewhat positive for now on this one as well, unless this this pair suddenly starts reversing sharply to the downside here and moving sharply below this little area right here. Let me just put this one on the chart. So if it drops below the 1.1754 zone, then, well, I mean, this is where the downside could be back on the table. So be safe, guys, on this one. Be very careful, and hopefully we can squeeze something out of it. But jumping into GBP USD, so here we also had we saw a good strong rally here to the upside last week. But now the pair this morning, the pair is correcting, which is quite fine, to be honest. We'll keep an eye on this little low here, the inside swing low of the 19th of March, and that's roughly around the 1.3035 territory, approximately around here. Now, if this area does provide good support, we could see a nice reversal here to the upside, and we could finally see a test of this 1.32 zone, where the pair fell shy of a few pips from hitting that last week. But this time, if this area, if the 1.3035 zone does provide good support, then we could see this the pair reversing earlier here to the upside and hitting this 1.32 zone, or even breaking it and pushing further north. Now, of course, the next good target here above the 1.32 level is the 1.3515, but again, we'll get to that if we get a push above the 1.32 zone. But again, we're keeping our eyes on the 1.3035, which is the inside swing low of the 9th of March. In case this suddenly drops below this area, and we see a daily candle kind of remaining below this 1.3035, then maybe we could kind of consider a bit of a let's say a larger correction here to the downside towards this upside support line taken from the low of the 30th of June. Jumping into Euro JPY now here, beautiful move. I talked about this pair last week, and basically what I was saying, that if we get a break above this 124.43 zone, yes, that's wonderful, good news for the buyers, and we could see this one pushing further north, where the next target could be the 125.23 level, marked by the highest point of May 2019. So as you can see, the pair did reach that area and kind of retraced back down. So this morning we're seeing a bit of a correction here to the downside. However, the rate remains above this highest point of June still, so that's great for the buyers. If it continues to balance above it, then yes, an up move here again could be possible. For those who are more on the cautious side, probably wait for a push above the 125.23 level first, and then yes, we could consider the next target here at 126.81 zone, which is the highest point of April of 2019. But again, all eyes are on the highest point of June right now, where the pair is very close to that 124.43 zone. Excuse me. If it continues to provide support, then yes, a nice good push higher could be possible. If this area breaks and the rate continues to slide lower, then yes, of course, this could lead to correction here towards this upside support line taken from the low of the 7th of May. So keep your eyes on that one, guys. And finally, Euro USD. So the pair drifted lower and didn't really close below the 1.1725 territory that I was talking about, but it did close below the highest point. And let me just pick up on this one, the highest point of September of 2018, which is around the 1.1815 level. So it closed below it on Friday, and this morning we're seeing a bit of a correction here to the downside. However, as I said before, if the rate continues to balance above this 1.1725 zone, then there is still a chance for the bulls to kind of reverse this one earlier to the upside. However, if it starts dropping below this 1.1725 territory and we see a daily close below this area as well, then maybe a bit of a larger correction to the downside could be possible. And this is all what I was talking about last week, basically, that saying that this week we may get maybe a bit of a correction here, but of course, don't get me wrong, we'll go on this slowly, because at any point it could reverse sharply to the upside, because the overall kind of the trend is still to the upside. So if we do see a move lower, then this could be just seen as part of a correction. So that's why probably the bears should remain very careful. And probably they should go step by step on this one. So that's what I'm saying. So a drop below the 1.1725 territory could do the trick for more sellers here, and potentially kind of lead the rate towards this upside support line taken from the low of the 14th of May. So keep your eyes on that one. But in case this starts pushing back above the 1.1815 territory, of course we'll aim for the high of last week near the 1.1909. If that gets broken, the next little target here is the high of the 14th. Let me just kind of quickly capture this one, the 15th of May of 2018, and that's roughly around the 1.1996. Slightly above that, we do have that psychological 120 zone. But again, for now, let's keep it careful here, because we are seeing a bit of a correction to the downside. So I hope you found it useful, guys, and thank you very much for watching and listening. Of course, keep your eyes on the economic calendar. We do have quite an eventful week this week. So yep, keep your eyes on the news releases, on the data releases. So yep, and of course, guys, as always, I hope you stay safe, both health-wise and market-wise, and I'll catch my video later on. My traders tea time is always 13:15 GMT time. For now, I hope you have a wonderful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.